Hello guys, Luca Santos here from ACY Securities. I'm the technical market analyst, as you already know. And today we had at 12:30, actually it was at 12, sorry, on the lunchtime in Australia time, Sydney time. We had the RBNZ, the Reserve Bank of New Zealand, pausing again the OCR. What's the OCR? Basically, the OCR is the official cash rate. It's basically another term that, a few banks have their own terms. So RBNZ has the OCR, so it's basically the rates, if they're raising rates or not raising rates or pausing rates or lowering rates. So basically they use the OCR, official cash rate, okay? So now they paused at 5.50, okay, 5.5. And what does that mean for the New Zealand dollar, right? Because it was a pretty interesting take on NZD USD, especially because we know once a bank pauses interest rate, a central bank pauses interest rate, we're gonna have a spike down into the currency from that country, right? But it didn't happen much on New Zealand dollar this day, because there are a few things I want to talk about on the rate statement that it's most important than only the decision of the rate, okay? So it doesn't matter if a central bank says, oh, I'm going to raise rates today, but I'm going to pause into the next meeting. Then again, as we just talked about the RBA last week or 2 weeks ago, I can't remember now, I've said the same thing. And I brought it here with me, the rate statement for you guys, so we can have a few intakes on that. So basically, there are basically 5 or 4 main points they're discussing into the rate statement. The first one is that the demand in the economy is slowing, so this is good for them to not be raising rates anymore, because once they're raising rates, they're trying to control inflation, bring inflation down. That's the main priority for them now, right? Inflation is coming down, but it's still very, very high. And for them, knowing that the demand in the economy is slowing is already a good point for them, right? Because they can notice that the rates are still high, the people are not demanding much. Second point they do is some factors are supporting economic growth at the same time. So this is good as well. So there are a bit of an equilibrium there. They are trying to control the inflation, raising rates. This is not too good for the society, but the economy is still in a good growth, okay? The third point is labor supply is improving and supply chain bottlenecks are easing. So there are a bit of good and bad on this line, but it's still mainly priority is doing well. And the last one, that is the most important point that they've made here, and this is why the New Zealand dollar did a little bit of strength during the rate statement, and not only look at the pause and keep going down. And this was that the higher interest rates are still required to meet our inflation and employment objectives. So this is the main point. So just on this line here, we can see already that this won't be the pause for the rest of the year. They may be looking to raise interest rates again, right? So what we're gonna have to pay attention is, we're gonna have to pay attention on the inflation. If inflations continue to go down on New Zealand, then it's a good point. But if it comes up, then we're gonna have to raise rates again and again. So that's pretty much for the RBNZ today, okay? That was pretty simple. I think you guys can get it. I wouldn't trade New Zealand dollar for this week just because it's a bit confused. We do have them being hawkish, but we do have them taking dovish actions. So I would step back on New Zealand dollar and I would leave the trade there. Now, another thing pretty quick I want to talk about it is that if you're a trader and you have been to the market since last Friday up to today, Wednesday, you can notice that the JPY is getting a bit of strength, right? You can see that USD JPY is coming down as crazy, NZD JPY coming down as crazy, Euro JPY down. All of those, the JPY quotes currency are coming down. And even my trade unfortunately got stop loss today on GBP JPY because I didn't knew it. And I was like, okay, what's happening with JPY at the moment? JPY is so stronger, but the monetary policy, the MP into Japan, the BOJ, the Bank of Japan, is so dovish. Well, I look it up, and last Friday to Saturday in Australia, they had a meeting, and the meeting was pretty hawkish. So what is happening is everyone is waiting now for the BOJ, for the Bank of Japan, switch MP, switch monetary policy. Well, what that means is they're pretty dovish now, and they have negative rates in Japan. This is good, right? Well, of course it's good for borrowing money, you know, and then investing in another country. But it's not good for if you want to buy Japanese yens and put your money into Japan for fixed income. This is not good. Why? Because it's negative, so you won't be getting anything. And the big talk is they will change it. If they change it, it will come positive. And look how much opportunity of how much room of growth you have. Since coming from a negative point all the way to a positive point, let's say 2-3% rate would be more than 100-120% of gains only on that short amount of time, right? So I think we have to pay attention on the strength of JPY in this coming week. There are opportunities now into Euro JPY, AUD JPY, NZD JPY, but as I said, I would step back from NZD. But yeah, guys, just pay attention on this bit of strength that is coming out from JPY, and keep your eyes on any news from Bank of Japan or Bank of Japan trying to improve monetary policy, those lines, okay? Well, that's all for today, and I see you in the next video.